and welcome to Morningstar. I'm Emma Wall and I'm joined today by Kunal Desai, manager of the Neptune India Fund, to give his 3 stock picks. Hello.
Hi.
So what's the first stock you'd like to highlight today?
So the way in which we manage money in the Neptune India Fund is by having 3 silos. Now, the reason we have these 3 silos is because they have low correlation with each other, which helps us from a risk-adjusted perspective. So the first silo is structural growth. And structural growth are the companies that consistently earn a return on capital in excess of their cost of capital. And the company I would like to highlight was one called Asian Paints. Now, Asian Paints is the largest paint producer in India. It's the 2nd largest in Asia. And really, this is a company that benefit from the usual structural tailwinds of India: rising middle class, accelerating urbanisation, per capita consumption of paint a quarter of what it is in China. But what we really like about this company is the fact that they're able to take advantage of these structural tailwinds. They have phenomenal entry barriers by way of 36,000 different dealers who they sell through.
The network effect.
Exactly. Their distribution reach is far stronger than any of the other players in the market. They're very innovative. This was the first company actually back in 1970 that bought the first ever computer in the Indian corporate system. And even today, they look to extend that through moving into other areas such as home solutions, franchise in particular. And finally, it's a company which spend a lot and reinvest their money back in the business. When we look at A&P spending, advertising and promotions, it's 3 times as much as the number 2 player. So this is a company for us which fulfills that ability to earn this return on capital in excess of cost. It's a company which we believe will see rising return on capital employed, moving from 30% where it is today to about 35% by 2020. And for us, given the solid management team that exists in there, that's very much structural growth for us, and it's Asian Paints as the first pick.
So the thing about companies like this, which you say are benefiting from the growing middle class in any emerging market, is that's not a news story. So what sort of price are you paying for a company like that?
So this company would trade at a premium to the market. And when you look at it both on a PE basis or a price to book basis, it is at a healthy premium. But when we look at what's being implied in terms of growth, it's about 12% earnings growth each year to about 2025. Now, given the levers they have, not just from a pricing perspective, not just from a volume perspective, but also being able to cross-sell their consumer base into different other products which they're looking to extend. This is something that we think they can beat these expectations. So you're right, when you look at it on a static valuation basis, it might appear cheap. But given the compounding growth we expect, we still think it represents good value.
And what's the second stock today? So
the second will come from our second silo. So the second silo is economic recovery. So these are typically companies who've invested a lot by way of CapEx and then look to sweat those assets, that CapEx, for free cash flow. So what we do here is we try and identify companies whose return metrics are below their mid-cycle, whose margins are below their mid-cycle, but we expect that to begin to move up. So the company I would like to talk about is one called Apollo Hospitals. Apollo Hospitals are the largest hospital company in India. And what they've done over the past 6 years is this extraordinary investment phase. They've doubled the number of beds they have from 3,000 to 6,000 beds over the past 6 years. So as a result of that, margins have been crushed, return ratios have been crushed, utilization has fallen, and investors get scared. But for us, this is exactly the time when you should be looking at a company like that. They're going on a 2-year CapEx holiday where no more beds are being added to their portfolio. And we expect, as a result of that, utilizations and return ratios to move upwards. And this has an extraordinary effect on return on capital employed. And over the next 3 years, we see an actual jump of about 10 percentage points to about 27% by the end of 2019. So for us, this is a company, again, who focus on capital allocation, who focus on shareholder remuneration. And they're at this very interesting stage of their own investment cycle, which we think can be fruitful from an investment standpoint.
And what's the third and final stock?
So the third silo is turnaround companies, self-help stories. Now, a lot of people often think, a turnaround is just a company that's underperformed its peer, therefore there's a turnaround story. But for us, we look for 3 things in a turnaround. One is the ability to have a very strong franchise. The second is a change in management who can also affect change within their company. And the final is, has this new management team given us as investors financial targets? So the company which we think fulfills that is a company called Infosys. Infosys is the big IT bellwether, but it's had a pretty poor time over the past 3-4 years, underperforming TCS, Tata Consultancy, to the point where actually its valuation was at about 30% discount. Now, what's the turnaround? The turnaround was they've got a very strong franchise, very good brand equity with their key clients. They brought in a new management team, Dr. Vishal Sikka from SAP, who has been able to effect change within his company, and he sacked, complacent senior management essentially. And finally, he's given this financial target of looking to double revenues with a 30% margin. That'll be very difficult to achieve, but at least it gives us as investors, goalposts for what they're trying to achieve. So for us, again, the valuation for us looks reasonable. It is underperformed its closest competitor, but has these very strong virtues, which for us make it a very exciting turnaround company.
Kunal, thank you very much.
Thank you.
This is Emma Wall from Morningstar. Thank you for watching.